Hello everyone, and welcome back to Explain the Charts. Today is November 3rd, 2025, and we are doing an in-depth analysis of Amazon, ticker symbol Amazon. The stock made an absolutely massive move late last week, and we're going to break down the news that caused it and then dive into the charts to see what might be next. The big catalyst was Amazon's stunning third-quarter earnings report, which crushed expectations. The company reported revenue of over $180 billion, a 13% year-over-year increase, with earnings per share hitting $1.95. But the real headline for Wall Street was the re-acceleration of Amazon Web Services, or AWS. AWS growth jumped 20% to $33 billion, its fastest growth rate since 2022, signaling incredibly strong demand in cloud infrastructure and AI. This news, combined with cost-cutting measures like layoffs to improve margins, sent a wave of bullishness through the market. Analysts have been overwhelmingly positive, with firms like Wedbush and UBS raising their price targets to the $280 range. All this positive sentiment culminated in the massive price action we see on the daily chart right here. Looking at this daily chart, you can't miss the enormous gap up that occurred last Friday, October 31st. The stock closed on Thursday around $222.86 and opened on Friday at over $250. This powerful gap up pushed the stock to a new all-time high of $250.50. This move is a direct reflection of the market's extremely positive reaction to the earnings report. However, what happened after the open is critically important for us to analyze. Notice this candle from Friday. It has a long upper wick, and it closed significantly lower than its open price. After hitting that all-time high, the price sold off during the day, closing near $244. This type of candle, especially on such high volume, often indicates significant profit-taking and can signal a potential short-term top. It suggests that while the long-term picture is strong, sellers stepped in at those record prices. To get a better idea of how this played out, let's zoom into the intraday action from Friday. Switching over to the 15-minute chart, we can see Friday's trading session in detail. Here is the massive gap up at the market open, with the price spiking in the very first few minutes. But almost immediately after that initial push, a clear intraday downtrend began to form. We can see a pattern of lower highs and lower lows throughout the entire session. This confirms that the story of the day was profit-taking. Bulls pushed the price to a record on the open, and then bears or profit-takers controlled the price action for the rest of the day. The price did find some footing around the $244 level into the close, which will be an important short-term level to watch this week. Now, let's go back to the daily chart to discuss what this all means moving forward. So, what are the reasons to be bullish, and what are the reasons to be bearish? The long-term bullish case is undeniable and is primarily fundamental. The acceleration in AWS growth is a massive tailwind. Amazon's heavy investments in AI are positioning it for future dominance, and improving margins show operational efficiency. Technically, the stock is in a strong uptrend, and this massive gap has created a new major support zone between the Thursday close of $223 and the Friday low of $244. As long as the price remains above this gap, the long-term bullish structure is firmly intact. Conversely, the short-term bearish case stems almost entirely from Friday's price action. That bearish reversal candle on record volume is a warning sign that the stock may be overextended in the short term. It suggests a period of consolidation or a pullback could be coming. Bears will be looking for a break below Friday's low to try and push the price down to fill a portion of this massive gap. So, to recap everything, let's lay out the most important price levels and potential scenarios. The key resistance to watch is the new all-time high at $250.50. A confident break and hold above this level would signal a continuation of the rally, reinforcing the bullish case with a 75% likelihood if we see strong volume on the breakout. The first level of critical support is Friday's low at $243.98. A break below this level could open the door for more downside and further profit-taking. The most significant support zone, however, is the top of the gap from Thursday's close, right around $223. A pullback to test this major support zone is possible, and I'd give that a 25% chance in the coming weeks, especially if the broader market shows weakness. A hold above this gap would be a very strong sign for long-term bulls. Going into this week, watch to see if buyers can defend Friday's low or if sellers continue to press their advantage. The first few hours of trading today should give us a good indication of short-term direction. As always, this video is for informational purposes only and is not financial advice. You should always do your own research and make investment decisions based on your own analysis and risk tolerance.